This is how you can use Bollinger Bands to make big profits. Bollinger Bands are one of the most popular indicators traders use to measure market volatility and identify potential breakout opportunities. They consist of 3 lines, a middle moving average, and 2 outer bands that expand and contract based on market volatility. A price touching the upper or lower band may indicate an overbought or oversold condition. If the price is below the middle band and moving towards the bottom band, you can consider going short. By observing how the price interacts with these bands, you can plan your entries and exits with more confidence. When the bands are tight, it often signals that a big move may be coming. If the price is above the middle band and moving towards the top band, you can consider going long. It is important to remember that this is not financial advice and that trading with leverage carries a high level of risk. Always do your own research and never trade with money that you can't afford to lose. If you want to learn more about trading and make bigger profits, sign up with Innohedge Limited today.